All right, before we get on this session, I just need us to do a little quick routine. I want to say our family that it's going to be a wonderful session. I'm going to get best out of this call. My mind is open to the realities of trading. I understand trading. Trading serves my purpose. I am quick to learning. I'm always going to be the best of me when it comes to analyzing the market and being the best version of myself. Put it this done. Okay. She got that. If you heard me, put it is done. Yeah, it's always very, very important. That messages you need to code yourself. You need to keep telling yourself every day. Organize your mind, prepare your mind before you get into this market, because the truth is the market is the reflection of the life you're living every day. Okay. So 2024 is a new year. It means you have to be a new trader to have new results. Okay. How you see anything is how you see everything. Seeing the perspective of the year, seeing the perspective of the month, seeing your perspective as a trader is really very key. One of the things I want to focus this call on. All right, I want to make some people co-host. So you accept the people who are coming in. Is what it takes to trade for your risk and risk for your trade. A lot of people, when you get started in trading, and you're not conscious, what you do is that you're risking for your trades, and that is why you're so uncomfortable going through your trades, because why? You're risking for your trade. But one of the things I want to start teaching, or I want to start bringing to our consciousness, is trading for our risk. Okay, so I want to ask this question: between the analysis and the money you have and the risk you have, which is the most important thing? And I'm going to ask the question in a different way. Okay, or even if I pose it as a different question, between a better analysis and the risk you have, which is more important? Okay, so that's the question. All right, so you guys go ahead. Very, very beautiful question. Okay, okay. I love that. I love that. Okay, you're catching along. All right, you're catching along. Okay, your risk, it's more important than what you're going to risk it for. So when you have the approach that I would have to protect my risk, I'm very conscious of my risk. Okay, I'm letting that, this is what I want to risk today. This is what I'm risking this month. This is what I'm risking this week. When you become a risk trader, a risk conscious trader, your approach to analysis are going to now be different. Okay, the consciousness of risk is what makes the banks what they are today. Okay, so when you begin to treat your analysis to serve your risk, you're going to find out that you're more of a conserved trader and more of a disciplined trader. But what most of us would do, I'm using us right now because we're in this environment, we find the analysis before we analyze our risk. Am I correct? Put 100 if you got what I'm saying. We find the analysis, we first hit the analysis, find the market, then we begin to think about our risk. Okay, what should I risk? Is it going to be risky? Okay, let me first use 0.5%. Okay, which have some foresight to it. So as you come into this trading environment, the first thing you want to focus, the moment you slide from the psychology, all right, and you want to slide into the trading, I have so many things happening at 9. trading activity, first thing is protect your money by protecting your emotions. Write that down. Okay, put a guard on your emotion. And the only way you can put a guard on your emotion is when you understand the money you want to lose for each trade you want to take. So the moment you write that down, okay, before you find the market, settle your emotion. Today, I am willing to risk $150 out of my 130,000, out of my one of my $30,000 account. For this trade I want to take, I'm risking $150. Do you know what you've done the moment you do this, even before you see the market? That money is lost from your account already. That money is pushed from your mind. You are not going to be, it's not going to be as same as when after finding the market and you find that the market was good and the next thing you're not looking, okay, what should I use? All right. Your mind still has all of the money. So the moment you say, okay, let me use this right now, your emotions go with it. But when you have your emotions already settled before you find the market, you're going to find it. The next thing you're doing is just put your stop loss put and you take the trade. All right. And what have I not done? Okay, let's shut all this down. Are we following? I hope I'm not breaking. My network is good enough. Okay. So that's one of the things, as small as it is right now, this communication changes everything. It's just going to affect something about when you know that in the morning or the New York session or the Asian session, for every trade that you're taking, you're going to use $150. When you train yourself over a period of 1, 2, 3 months to know what to use for a trade, at every point in time before the trade approaches, you're going to be well guided and well emotional balanced. Does this make sense? Okay, so that's one of the keys to 2024. Your trading in 2024 is master your emotion by mastering the risk before the trade. Okay, so and it will not align. So there are, well, this may not really play strong very well, but as you begin to grow, it's just that we're in this environment. Even for me, there are certain things I should be doing in trading. I don't do them because I am not a person of mass. I trade like I have the students to trade with. But if I was trading alone as a loner, there are certain analyses that I'm not even supposed to look at in the first place. But because of you, I do look at them. And I cannot explain why I shouldn't look at them for you. So I had to look at them and trade them with you. Not because they are necessarily my analysis, but I'm also going to teach you how to identify analysis based on certain risk factor. Okay, so there's a training that I've done, the psychology of risk. All right. So the moment you know your risk, one of the things you now want to do is to find the market that fits the risk. Okay, not all analysis will fit your risk. The most important thing in trading, what is the most important thing in trading? Okay, is your risk. What you're willing to lose for the trade. So many of you are done trade management, risk management, equity management. Okay. When we talk about trade management, your analysis determine your risk, not your equity. Many of you, the way we learn trading, the moment you have $1,000, you think you can trade a mini. Okay, true or true? You think your valuable risk is a mini? No. Okay. Some of you think you have $10,000. You think your valuable risk is a standard lot size. No, your risk determines your lot size. Okay, so I can have a $100,000 account. Okay, but my risk is going to tell me if I should use a standard 10 or a standard 5 or a standard 7 or a standard or a mini. So over time in trading, you want to find the risk that fits your type of analysis and also your risk to reward, your trade management, your equity management, and your risk management. These are risk routines you have to master, but the analysis is what matters. So over time, over the course of this year, I'll be taking several classes that has to do with trade management, risk man. Now that you know that risk is very key, because what's going to make you money and make you withdrawals? All right. What makes you unstable in trading is your risk. Okay, let me take this away first so that I want to bring us. Do you know you can have a very good risk trading and you can lose 7 trades and win 3 trades, but you be in profit? Okay, but do you know you have to master that type of trading? Because there's an emotional side to it. Okay, because even in that trade, you can blow an account, but that doesn't mean you lose. Because out of the 10 trades, you don't know which of the 3 are going to be profitable. So if you do not have a good risk guide, your 7 trade may lose your account. But if you had money for all 10 trades, you would have been in profit. Am I making sense? Some of you trade, you exhaust all of your risk, then the next trade you're supposed to take, you ignore it and you find out that that trade was the trade that actually went. Many of you have experienced that. But you have exhausted all your risk. So these are different risk routines that we have to address through documentation to know the one that fits you over a period of 6 months to 1 year. You would know. We may be using some right now, okay? But over time, I'm beginning to now take the bucket back or take the tracks back to allow you come forward. Then I follow you from the back. You know, it's sometimes not about me going forward and say, okay, this is what I'm doing. I have to now learn, now that you know how to run so that I see how you're running. Some of you are running bent. I was, okay, this is how you need to run. Okay, I need to lead from the back. That's one of the things I want to do when it comes to trading. I'll be leading from the back. Okay, so risk is one thing we have to master this year. Regarding the fact that we are trading funded accounts. Funded accounts does not give you 100% risk. It gives you a partial risk. You are only supposed to lose 9% if you're trading a 3K account. Overall, you're only supposed to lose 8% if you're trading a 10K. Overall, you're only supposed to lose 7%. So you are limited to your play in trading. So how do you manage a funded account? Take it from me. Okay, there are 2 ways to manage a funded account. Okay, one is aggressive. Okay, 2 is preserved. And I will show you the statistics for both. Aggressive is fast, but the documentation says over 97% of aggressive traders don't make it to what? Withdrawals. Okay, are you following? So take the statistic. You're the one to choose which. I could teach you to be aggressive. In fact, at some point, I plan to be aggressive. But aggressive works for cash flow traders. It works for people. It works for people like us that have money to always. I can fund 50 times, and if I get one, I've made all the money. But can you fund 50 times? Okay, so it works for people who can be consistent, not for people who are learning and preserve. Are you following? I need everybody. I need you guys to get these first tips. We're taking the first 25 minutes to do the tips and ideas. Then we're going to look at the chart together. All right. The chart today is not going to be a whole lot of chart. I'm just going to show you a couple of things in the chart that has to feed the things that I'm saying. Okay. Then we'll get our weekly analysis. We should be done in our first our 20 minutes or our 15 minutes. That's my plan for the score. Does that make sense? So now preserved traders are slower, but they lose less. And they make up 90% of those that make withdrawal from funded account. Do you guys get the statistic? 90% of those who make money from funded accounts are preserved traders, risk preserved traders. They take time. Okay. 95% of those who lose money for funded accounts are aggressive traders. They make up 10% of those who withdraw. And guess what? They make the most money. That is why a lot of traders are bent to be aggressive, because the small 10% that are aggressive, loud. So many of you, when you come in here, you see some people making crazy withdrawals because of aggressive trading. You didn't know that 95% of the people who lose money are aggressive traders. So when you have this kind of information, the question you ask yourself is, am I ready for aggressive trading? And if the answer is yes, you can, because they make the most money, but they are few. Are you guys getting my communication? Okay, and those few, they are there because they have the money to be consistent in funding for the type of risk they are trading. They are the ones that launch it, and they can fund a $3,000 account. They don't even go for 100,000. They can fund a $3,000 account, and they can trade it one trade. Okay, use all 6% for one trade. Okay, and if they hit it once, they hit it. And if they lose it, they fund again. So they have the opinion. Okay, I'm teaching different risk method. Rather than get a 30K account, they can get a small. So out of 10, if they get one, they are in profit. So, but they can get 10. They can set money aside to get 10. Many of you don't know these things. This is how many traders scale their account, but you don't know. Okay, they have the money to fund, so they try risk. Okay, but you're trading today, you're coming in as a saint, and you want the market to treat you as a saint. The market will slap the saint out of you. All right. I believe many of you, they have slapped the righteous person out of you in trading. They're giving you back and forth. So, but are we making sense with this communication? Okay. You have to be rugged according to the way the market is rugged. If you're not rugged through your approach, the market is going to mess you up. And I'm just trying to give you, 2024 is a year I give you a foundation and a blueprint for your own type of trading. So you know how you should trade. Do you want to be aggressive? Do you have what it takes to be aggressive? If you're not aggressive, stop imitating aggressive traders and just stay on your lane. Okay? Be preserved. How am I going to be preserved? Okay, in trading, these are the things you now begin to learn so that you go in the direction of the thing that fits you. All right. Put 10 on the chat if you guys go what I'm saying. I'm a preserved trader, but I could be aggressive. I have everything to be aggressive, but I love to be preserved because I want to build a nation of preserved traders. Because why? That is where people need help. Gambling is more of those who are aggressive traders. It's more of gambling. So let's look at now trade management. So I want to now move to trade management. Okay, the only trade that I've actually taken this year, and okay, let's see. Okay, this is not my chart. All right, beautiful. So I'll just be giving you, and if you have any question, please write your questions down. So I'm going to open a new chat. All right, so this is Eurocard. I'm not doing this analysis because I trade this currency pair. I just want to show us a couple of things. Okay, so let's say you're a fan of Eurocard. So let's say this is a currency that it's my currency that I trade. Okay, so I've made the notion that you have to every day when you wake up, what are you going to risk in the market before you even come to the market? So let's say my risk per trade is should I do that today? No. So let's say my risk per trade is, if you're new, don't use 1% for your trade. Okay, if you have a funded account and you're new, don't use 1%. And you guys can ask me this question maybe at the end of the call. I'll tell you why. If you want to be preserved, don't use 1%. Okay, because there are levels to being preserved. And I know with time, before time, I've told you, I've kind of had the feeling that we have the opportunity. Our trades are always good. Let's just use 3%. But I found that I did my scope of research. and the people that follow, the results are not good. And I found out why. Okay, you don't have the emotional capacity to maintain the losses of high impact trading. Many of you, and I need you guys to attest to this, you don't follow through your trade for profit, but you follow through for losses. Am I correct? When you use high risk, the moment your trade is in profit, most of the time you don't let it to go hit TP, and you use the shortest TP. Am I correct? But if your trade is going to loss, you don't leave the trade. It must hit the loss. But most of the time, you don't allow your trade to hit profit. Am I correct? I need you guys talking to me. Okay, so people don't follow through their winning trades, but they follow through their losing trades. The reason is the moment you increase your risk, the volume increases and your emotion increases with the volume. So the moment, because you have the fear of winning, the moment your trade is in profit, the next thing is you're breaking even if you're quickly, okay, you're watching the trade, because just keep going, just keep going, just keep going. All right. And the moment the trade begins to reverse, the next thing is that you're looking at the analysis. Okay, let me just take this one while it is good right now, and you leave the trade. Am I making sense? And we don't know the danger. When we make those quick and easy decisions, you don't know the danger you are adding to the future of your success and mastery. You can never master trading when you're like that. And I've realized that I've played that game for a long time right now because of many of you. And it is because of the things that are happening around this environment. People just want to cash out. But the way to cash out is a pattern. If you know and you have a documented analysis that if you get into this risk, my goal is to go 1 to 2. For every 10 trades, if you lose 7 and you win 3, you are in profit. If you go 1 to, okay, if you lose 6 and you win 4, you are in profit. If you go 1 to 2. So imagine if you master 1 to 2 over a period of 100 trades. And you just, if your emotions are too big, just under leverage and get that same mastery in a live account. You're going to find out that you're going to be making withdrawals if you follow through. We don't follow through. Okay. So one of the things that is one of the things we just have to be conscious of this year. We're going to try our best to be conscious of this year. So I want to play this right now. I want to talk about risk management. So let's say I want to buy Eurocard right now. Okay. One of the things we do, we learn several analyses that makes us get sharp entry. Okay. Now I'll tell you this. If you don't have the time for trading, there are certain analyses you should stay away from. There are many things I don't know about candle formation. I learned them, but I didn't know them. Okay. I am a deep trader. It means I look at higher time frame. I look at zones, okay, psychological areas, institutional areas, okay, where the big points in the market where the bank invests in, okay, and I play these areas. So one of the things is if I'm buying this market right now, if the market breaks this bottom right now, the market is going another direction. So if I'm taking a trade here, it doesn't make sense. Okay. If I say, okay, this is a short, so let's say this was an entry, breaks, retest. This is an entry. The stop loss to this trade ideally is to be here. So this is trade management. If I take a trade here right now, the stop loss is supposed to be 5 pips away from this low. That is if I'm lucky, the market doesn't spike. That is the idea. On the 1 hour, on a 4-hour chart, this is supposed. Now, what is going to make me take this market? Let's say my analysis is this right now. Watch this. So this is a high, okay, and this is a low. So the moment market was consolidating, the moment it broke, retested, this is a signal, right? So let's say I want to take this signal now, okay? Let's say my confirmation is the next candle. If I take this signal, all right, so let's say the next candle opens and closes here for a buy, which is price trap. If I take this thing idealistically for a 4-hour time frame, okay, a general stop loss is here. So what's going to determine giving my $150 for the trade? I would have to calculate if I'm entering here, between here and here. Okay, how many pips is this? 96 pips. So the next thing that I do is I head to Forex calculator, all right? And I type 30,000. I'm using what? So let's say 100, what is it? What is $150? 0.5% is what? 0.5, that's 0.5. So good, 0.5 for 0.5 for 90 pips is what? I'm going to be using 150 pips, but what I'll be using for that trade is 0.24, even in a $30,000 account. Are we following? And what is it going to get me to make $150? Is 1-to-1 ratio. It means my TP, okay, is going to be what? I'm going to be very, so if my, now I want you guys to watch this. There are two things to this: understanding the risk and also playing the reward. I hope I'm not too fast. First is to understand the risk. Another thing, I'm talking about mastery. I'm not just talking about, many of you just trade, you're not mastering anything. You're just trading every day. Week after week, you're trading, but there is no blueprint of your trades. Someone cannot come and check your trade and see a pattern. You just take it as you feel. All right. 2024, don't trade as you feel. Feel your trading. Okay. So if I'm taking this trade, what's going to be my profit? My profit, if I'm playing, so there is what we call trade management. I'm showing you trade management right now, but there's what we call risk management. What is your risk management routine? If your risk management routine is 1-to-1, okay, it means if I'm taking this trade right now, my profit, my TP is going to be where? Okay, so let's say I take this trade. Where is so let's say my entry is here, 1-to-1. This is 1-to-1. If this is my stop loss, okay, stop loss is, let's just say 95 pips. My TP is going to be 95 pips. Now watch this, two things, okay, two things. So my TP is going to be what? 95 pips, somewhere around here. So let's just say this 95, okay, boom. Now this is it. This is, oh, what did I just do? Oh, 950. Okay, good. So this is going to be, now watch. This is now my risk routine, 1-to-1. And based on trade management, this is supposed to be my stop loss if I want to idealistically win this trade. This is supposed to be, if I don't want to gamble with this trade, I can take this trade and forget about it, look away. This is where I'm supposed to put my stop loss, because why? If this market breaks this area, it's gone. Okay, it's gone. So let it be gone. Now, if this market comes here, this is my TP. But another thing you have to put in risk in trade management, your TP varies based on the technicals as well. So my risk routine may be 1-to-1. But what is the TP for this trade? This is TP1. This is TP2. This is TP3. If I begin to ignore it because I'm taking a 1-to-1 ratio, I will begin to have, there'll be an interference or a conflict between my risk routine and my trade routine. And we all experience it, but we don't even know. Okay. If my risk routine is 1-to-1, okay, this is a challenge, because the moment I come here, idealistically, all right, I should be taking partial profit. Why? Because trade-wise, this market, is it on a downtrend or uptrend? It's on a downtrend. Okay, this is a high, a lower high, lower high, which means even if this trade wants to go up, it has a challenge. It has to break this, confirm this before it will go up. I don't want to be gambling with this. So this is what I'll tell you. There are times you have to compromise your risk routine for your first profit, for your break even, for your safety of the trade. Because if you don't, you're going to always find issues. But there is another resolve, very hard one, which is one of the things I want to learn in 2024. That's why I'm still in GJ. GJ have given me almost 100 pips, but I'm still in it. I told myself, is either that trade hits my stop loss, okay, or it gives me what? 150 pips. And I told I've seen it through. I told myself, you will take this loss or you take this profit. That's the hard one. Many of you will not do it. You see 50 pips and you're looking away. Your finger self done the your finger is acting ahead of you. All right. If you're seeing 50 pips. But one of the things, Mr. Jean is laughing. You cannot, all right. It's something because my goal is to play pattern than play profit. I want to see the pattern in my trading. I want to be glad that I'm holding it off the fort. So, because that is the only way you're going to get sustainable results. You don't want to be the emotional crisis in trading. But I'm also giving you the different loopholes that may come in. Are you guys loving this topic? Okay. So if my resolve is 1-to-1, okay, it means if I use $150, my goal is not to make $150. I may not make $150 because why? The moment this trade hits here, I will take 50% partial profit. It means I take 75%. Then I allow this trade to run. And I can allow it to run while my stop loss is still here. And if this trade finally goes here, rather than $150, I'll make $100. Is that a good bargain, a good business? Okay. And if the trade decide to come back and take this off, it means I will not be in lesson because why? That first profit I've given him what? My what I was supposed to lose, I've taken cushion. So that is one approach. That is the early trader approach. And I'm giving you that approach because many of you, that's what you should or will like to do. That's what I'm giving you, not because it's the best, but I'm also giving you because you'll find out that that's one of the things you would like to do, secure partial profit. And the only way to secure partial profit in trading, one of the wisest ways to secure partial profit in trading is when the market has hit a technical area that there is bound most of the time to be a reversal. You take your profit there. Okay. But on the other hand, when you see, this is one of the things I said earlier towards the time, when you see that your risk routine does not fit the analysis, you look away. It means that analysis is not for you. So that's the second way. That's the second one. If you don't want to compromise your risk routine, okay, and if the analysis does not fit it, what do? Talk to me on the chat. You find another analysis. It means you would always have to trade an analysis that fits your what? Risk routine. Okay, so let's go find a trade that fits 1-to-1 ratio right now. So let's just scan through. Okay. I'm just scanning through. Beautiful. Hold on. Okay, beautiful. So let's say I want to buy this trade, just like Eurocard. Okay. This is my floor. Okay, let me take this. This is my floor, and this is my consolidation. So let's say this market. Oh, sorry. Just analogy, all right? Let's say the market breaks here, okay, and retests just like what we saw in ECAD. Okay, the strongest fault in this trading is this and this. So here to here is how many pips? Okay, so I take the trade here. Boom, 45 pips. Here to here is how many pips? 25 pips. Does this trade fit my 1-to-1 ratio? So this is 30 pips for what? 45 pips. That is 1 to 1 point, almost 1.5, 1.3. Okay, it means it's fit. So if I find this trade, this is what I should be trading rather than Eurocard. Because why? This fit my 1-to-1 ratio. Are we making sense out of this right now? So rather than risk for Eurocard, because Eurocard is good, I'll find a trade, okay, that will fit my risk, not risk my trade. So if you trade EuroCAD, you're risking the trade. But if you trade AUD NZD, okay, you're trading your risk. Did you guys get what I just said? This one, that's the topic for today's trading. Okay, trade your risk, not risk your trade. If I trade EuroCAD, I am risking my trade. But if I trade AUD, NZD, okay, I'm trading my risk. Just imagine you scan the market and you find trades that fit your risk routine, and they also have what a good trade, and you follow the trade. So if I'm putting my stop loss here, I'm putting my stop loss below this, and potential that, and this always talk about what potential. I've taught potential several times in trading. Okay. Then another thing. So Cambry, what if you're going for a sell? So let's say Cambry, we're going for a sell. All right. This market has a floor level, ceiling level, floor level. So this is a zone. Okay. If I'm going for this sell, idealistically, this trade, idealistically, the active high is here. This is the active 4-hour high. And normally when you're taking a trade, a very valid trade, your active high is your next point when you're trading institution, and when your active high is your next high. So if I'm taking this trade right now, the next TP zone is here or here, okay? So if I'm taking this trade, it means I can get an entry here and put my stop loss here. That is about 70 pips. If I'm coming down, that is about 100 pips. Or I stake here, still 70 pips, that's 1-to-1. It means the sell for this market, if it's going down 1-to-1, fits my sell ratio. But if I'm beginning to do 30 pips, I'm beginning to take all this, it means you are gambling. You are risking your trade. That's why most of the trades we do, they will play our direction, but they take us from our risk, because why? We risk our trade. We didn't trade our risk. Am I making sense now? So this year, trade more of your risk. Don't risk your trade. Even if the trade goes to 70 pips, your risk, okay, give it the 70 pips and let it play out. It's better you begin to break your TP than to compromise your risk. Are we following? Okay. Are we following? Any questions so far? That's our class for today. Okay, in the next 10 minutes, I will just look at the market, I'll find two concepts and we'll close with that. But that's our class for today. Was it a beautiful way to start the year? I know you guys are surprised. Are you guys surprised? Is anybody surprised? Kevin, you're done. Are you sure? Yeah, all right. Okay. So go ahead, man. I'm calling you, Sana. Go ahead. Shoot.
All right. Good evening, Coach. Thank you so much. So what's your take on, you taught us swing trades before, and sometimes when I'm analyzing swing, I'm saying that where you probably should put your stop loss is quite far, and the pips, the number of pips is quite big, and I'm thinking the risk here is quite high or something. Is it, how do you advise those of us that are just starting out to do swing trading, or and if we want to do it, how do we go about it?
Okay, so I love to play principles than tactics. Okay, so there are different tactics to trading. You know, I said something. Trading is about making a decision to buy and sell. But the decision was first a decision. It's not primarily to make money. It is primarily to flex your knowledge of the market. Then it's like giving value for knowledge, then money follows. But one of the mistakes we do, we allow money to come first, then value follows later. Okay, you can trade to learn or learn to trade. Okay, many of you, what you're doing, you're trading to learn. So practice is something that would answer a lot of our questions when we are allowed to learn to trade through practice. What is swing trading? What is the concept of swing trading? Swing trading means long-term trading. It means you are practicing more of patient trading. Swing trading is not necessarily because of deep profit. It's more of patient trading than deep profit. If you trade more patient, you would experience deeper profit. You cannot use the approach of quick daily entry or intraday to trade swing. We are doing something extremely wrong, even in our teaching. Okay, if I want to teach you as a swing trader, our concept of trading is that we may find four swing trades in a year, in a month. Okay, a swing trade can happen within a space of 2 weeks. So if you find a spot of entry in 2 weeks, so even if you see 4 swing trades in a month, it means you're sharp and you're very busy with the market. But what do? Because our trade potential is big, we not call it swing trade. No, that's not what swing trade means. So just, okay, hold on. Just looking at this market right now, okay, what is the swing of this market? Swing is also directional. What's the trend of this market? Okay, so actively the market is going up here. Okay, inactively the market has been coming down. All right, so we can say this is a down, this is an up. So if I want to take this trade, okay, if I want to swing this trade, this is not my time frame. If I want to swing this trade, this is I start from what? The weekly time frame. I want you to look at the weekly right about now. Okay, it gives you a bigger perspective that the market is what? Is pulling up right now. Okay, it's pulling up. So the market is a swing high. It's swinging on the high side on the weekly. Do you agree with me? So which means if I'm looking for a buy, I will find the position of a swing buy. It means if this market come here, this is my swing buy for a next pitch. Okay. You see that this is the low the market is creating because this is a low, this is a low, this is a higher low, this is a higher low. You see that this is a higher low, all right? Or the market is going to do something like this. Swing trading is different. It's going to break and come here and create another low here. So this is the next low, or probably this is the next low, okay, for a swing buy. Can you see that this market is not ready for you in the next 2 weeks? If you are swinging, this is not ready for a swing. Just because you enter the market and the market is going to come here doesn't mean it's swing trade. Swing trade gets their idea from the concept of the analysis. So if I want to swing this market right now, is it that this market comes here? Come on. This is weekly candles. It's going to take a long time for this market to come. It means this market is not ready for a swing buy. That is the concept of swing. Okay? Did you get it? So it means market, my swing. So anytime I meet the market, so I may do several analysis in a month. I may do 10 analysis, and all I'm just looking is for one market to activate. I put the risk. If I'm buying somewhere around here, okay, my stop loss, it's not going to be on the weekly. That's dangerous. Okay, I may come on the daily, look at it very well. So, okay, so the moment I see a daily candle close, so let's say, all right, I want to buy here. This is a daily low. So if I want to use a daily concept for a buy, I will buy here and put my low below the day. Okay, and I will buy up the potential. You can see the potential is crazy. First TP here, second TP here. Imagine, see the beauty of swing. All right, it gives you clear. It's going to take a lot of time. Okay, but just imagine I get an entry here. Okay, and my stop loss is here, a little below this. That is how many pips? Is it 75 pips? Stop is 25 pips, right? And my take profit is this next high. How many pips is that? 117 for 27 pips. That is a swing trade. And that is why you guys are getting the result of the concept far better than any strategy we've ever traded. Why? Because the concept is your daily swing. It can fall into intraday, it can fall into swing. Because why? Because of the potential, because we have to wait for the market. You can see that. Can you see concept in what we're doing right now? Because this is the concept of the market. Around here is the concept because another floor is here. So around here is the concept. So if we buy here, this is the low. Isn't that what we're doing in concept? So concept is I derive concept from the idea of swing trading, but I manipulated swing trading into intraday. So you're using concept for intraday, but it's actually a concept for swing. Because now if the market peaks here, this is a daily angle. It's taking all the way here. That's it's swinging because it's crossing so many days to get to this peak. You've activated swing when you do this. All right. Does that make sense? So it's how much you do this actively and let it play out over a period of 10 trades, 20 trades, 100, and you see the result of those trades. That's when we begin to decide. Your decision will not be for the trade. Your decision will be before the trade. If I get in, this is when I'm getting out. Okay. But most of these things, if you didn't ask me a question, I probably may not answer you like this. That's why it's good we have sessions like this. You guys ask questions. That's why I said I finished. Let me take question. The other question may bring how I'll bring this. But this information, we'd have to do better in following through this year. We really don't follow through because we allow our trades control us, okay, instead of our discipline control our trades. Do you guys agree with me? So learn a discipline. Let your discipline control your trading, not your trading control you. Because the trade, your result will always manipulate you. They are not real. Is that answer valuable to you, Madam Konyisola? Was it direct? If you practice the idea of swing trading, you would learn to stick to a decision. When you see a swing, you would love it, you stay with it. Okay? You don't have to say, okay, should I trade it? Should I collect profit? Just wait for it. But you cannot start at being a swing trader. To not favor you. It may not favor you because why? You're going to feel bored. You're going to feel frustrated. Okay. And entries are different. So, but one of the things I promised you guys this year is that I'm going to play more on swings. So just stay close. Any other question? Someone's mic is on. Shola, you want to ask a question? Why novices should not use? So you heard that question. I've actually answered it in the course of my communication, but now you want me to break it down. Why Shola's mic? I don't know Shola. Who's Shola? Okay.
Okay.
Please mute your mic. Who's Shola? All right. So I said is the emotion that goes with the risk you're taking, mostly when you are new. So I said when you're new, don't risk 1%. Okay. Mostly when it's a funded account. This is what you want to do in trading. Allow your discipline show your profit, not your profit show your discipline. If you consider high risk first, your profit will show your discipline. And profit cannot discipline you. It only gets you worse. True or true? But allow your preserved discipline show in your profit. So as a new trader, trade low, then go high. This is one of the things that is good in funded accounts. First, under leverage, get into profit, then begin to normalize your leverage. It's easier to trade with ease when you are in profit than you are in negative. I believe everybody must agree with me. Okay. So what I do is I preserve my trade. I could use a 0.5. All I just need to do is get into profit. When I'm in profit, I am more confident with my trades and I take risk quickly. I take trades quickly. Okay, and I get to make more when I'm in profit. And that is what most of you should do to manage some of the these are some of the things you just do to manage the emotions, because some of you are new, you're emotionally involved. I'm just trying to tell you one of the things to curb your emotions, not because it's actually a practice, but that is a suggestion and advice. Okay, so play low and let your result come from, I was preserved, but I was able to build this profit from my discipline. You're going to trust, you will trust more in yourself when yourself begin to see the result of your reserve trading rather than aggressive trading. Amen.
Hi, Coach.
Yeah.
So please, just for clarity, let's say I've determined my risk to be, you said we should not trade 1%. So that 1%, okay, let's say 0.5%, right?
Hold on. I don't want you to quote me wrong. I say as new traders.
Yes, I understand. I'm just trying to make an
Not
example.
so it's not that I'm quoting you that so Kevin said we should not use 1%. No, don't allow my voice sound in your head like that.
So for example, I've decided I want to raise 0.5%. So that 0.5%, is it per trade or per day that can then has to be broken? If I want to take 2 trades or 3 trades, that would not be spread across those trades. Is that what you
okay, beautiful. So first is you have the portion per day, then you have the portion per trade. Now, the portion per trade may differ depending on the types of analysis that are available onto you. So, but I have a risk for a day, and I broke it into, I will not use 0. So if I use 1%, you are not supposed to risk more than 3% of your account in a day. It's not ideal. So maximum that I would risk, but I don't even risk 3%. My maximum risk is 2%. Maximum is 2%. Okay. But I don't use the 2%. I only exhaust the 2% when I see setups and I'm already in trades. And I would also take, so I may say my entry, maximum entry per trade, depending on the setup, is 1%. It means I still have 1% to play. So I see another one, I use a 0.1. I see another one, I can use a 0. And the moment I'm done, I'm done for that day. Or I get into the trade, 0.5%. The trade did not go, and I'm finding another position, I would use 1%. It did not go. It means I'm left with 0.5%. I take that one, didn't go, we're done for that day. That is the only time I would risk the 2%. But if I trade a 0.5% and it goes, I may not even take a trade again. Because why? My 0.5% may give me 1.5 if I do 1 to 5, 1 to 3, 1 to 3. So I do not say this is what I must use for the day. This is what my risk limit is for the day. Doesn't mean my use limit. My risk limit for the day is 2%, but my usage per trade is what? 0.5. And if I get the result for 0.5, I'm done. That is preservation. Are we together now? And that is not being aggressive. If you build profit this way, I'm telling you, you will retain them more. Okay, so family, that is about our time. Okay. Yeah, potential 6% doesn't mean you should use it. The broker wants you to use it, but don't use it. Don't even have it. Okay, unless you want to be aggressive. And maybe another day we'll talk about tactics for aggressive trading. But if you ask me about aggressive trading, I can answer you, but none of you ask me. So that's because some of you're hiding your aggression, but you guys love to be aggressive. So it's better you ask me how to be aggressive, and I'll tell you how to be aggressive. But I won't tell you on this session because we're done right now. Okay, so this recording is live. It's something you should watch, practice. I taught you a principle that will change your trading if you put it in front of your trading. It's not supposed to be in between or at the back of your trading. It's supposed to be before your decision. Okay, we don't, but I just gave you guys a point into the year 2024. And if you take it seriously, it's going to be better. We're going to come back I didn't know you guys were going to take questions. I was supposed to do 10 minutes of analysis, but our analysis we go into tomorrow. All right. And I'm very slow into the beginning. Normally, I'm slow into the beginning of the year for certain reasons. And when I find my pace in the market, we're going to get everything we've not gotten. So tomorrow is trading time, 2 p.m. But before 2 p.m., I'm going to analyze the market in the morning and I will send the chart in our group. Okay, just follow the market. Don't forget your discipline. Don't forget your accountability. Don't forget why you came into this environment. Documentation beats everything. The more documented you are, the more mastered you'll be. And the more mastered you be, the more confident you will take trades and you'll be a success by yourself. So the rules of documentation, don't ignore them. Don't sleep on them. Every week, look at two charts and send it in the group. But that we'll look at it together. Then follow those two charts over the course of the week. If you master the act of staying in certain pairs and you get the result of those certain pairs over a period of time, you're confident. It's like dating. You're confident with those pairs would arise the need for your money making. Don't just stay in the market. Okay. God bless each and every one of you. I see you guys tomorrow. So can you please also provide advice on trading days, e.g. forget that one, don't worry. Just follow us. Follow me. Let me be your trading days. When I trade. All right. God bless you guys. Bye-bye.